Welcome one, welcome all. We have a big week for those of you trading options or just for those of you invested in the stock market in general. Very interesting day today. I know a lot of people are left up in the air thinking, well, is this it? November, a couple of green days. Are we going to end this month red? We are going to talk about that and so much more. We have a couple of very interesting things to look at in the stock market right now. A couple of very interesting companies that posted some big earnings. We have some NVIDIA stuff coming up. I know we have another couple of companies you guys were asking about last week in terms of earnings that we will go through. I want you guys always to keep in the back of your head whatever companies you want to talk to on our smash or pass, or companies you want to dive deep into with regards to their earnings. Please have those at the top of your mind. Feel free to drop those in the comments at any time. I'm here for you guys. I want to make sure that we're giving you what you need, what you want, what you crave, so that way you guys can really crush the week ahead and the month ahead. I mean, we're planning out more than a week at a time. So let's get into it right here, right now. Let's start out with Tesla. I think we had a very, very good week last week, coming off the lows of about 196. For those of you that were on the stream, we were talking about the bottom of this channel being the buy opportunity. We talked about buying below 200. I remember if you remember the last couple streams, we talked about sub 200 being the place to buy. We got just below there at about bottoming at about 194 and change. Before pushing up this week, very strong buyers last week. On the daily, let's go look at that. A little bit more of a mixed signal here. Again, we hit our heads about 227. We need to break above there if we're going to keep going. And now look like we're heading to either a little bit of consolidation or we're going to retest a little lower, maybe low 200s. Hopefully not going as low as the low 190s again, because that would not bode well for Tesla over the long term. Slightly higher than average volume on the daily, although if we take a step back, we could see that starting in December of last year, we saw pretty decent uptick in volume that we hadn't seen all throughout 2020. The last time we had seen volume this high, it was actually, or in 22 we didn't see it. In 2020 we did see it. So as you can see, we saw that there, and that was very, very, very interesting. So Tesla's one that's going to be strong on the watch list. I am going to wait for that breakout over 227 before I start taking any longer term bullish positions. Again, you can see that it's really bumped its head here before breaking out. When it does push up above this 227, 230 price point, it absolutely blows up and definitely pops to 300 or so. I mean, even going as high as 414 off the highs here back in 21. This is functioned as also support level when we are trading up. Remember, anytime we see that resistance turn into support, again, the ceiling becomes the floor. We know that this is a pretty stable price area. So we do like that area. Ideally right now for bulls to maintain control, we need this one to stay over 215, 216, right around the mid-range of this range we've identified here between 227 and 190s. We need to see it hold above there. Oh. Sorry. God, 3 times. Come on now. So if it can hold above 227, we're in a pretty good foothold to see a move higher again, as high as 300 right there. Seems to be it. So we're going to keep a close watch on this one. Again, nothing yet. Let's pull up Stocks Buddy here and see what it says about this right here and right now. Phenomenal indicator. We're going to go to the monthly. We want to get a little bit of a bigger view. As we talked about, remember, if we are looking at the monthly, which is like a large chunk of data, we're going to get a better, we're going to be able to draw a more accurate conclusion off of that data. You want more time in the equation. So looking at this here, we can see that Stocks Buddy actually predicted 194.70 to be support, and it was correct. So as long as this holds up here, again, we're looking for that breakout over to 230. At which point, that's where we signaled bearish last time. We went bearish from 240 down to about 106, absolutely crushed it before finally hitting our support there. And so again, the thing I love about this tool, man. So you can literally just trace support lines off what the indicator draws. Unbelievable. Anyway, so that's a bottom dollar support touch. Trading red up along the 130s right there. So we want to see this first support hold 194. If we don't, you can expect to head down to this blue line. If it touches there, that's a big time buy opportunity in my opinion, because that is the range dating back to July of 2019 before COVID boom even happened. So I think realistically, we could very well see this trend line get tested if we can't hold here. I would assume that would be my next target, to be honest. If we break below 194, I would go short to 150, 160 on Tesla. I think that would be a great trade. I think it's a high probability trade that'll make you a lot of money. Because worst case scenario, you hit 130 support and this thing booms back up. So we have to be watching that support there. We're going to be detailing that in the Discord. If you're not in there, make sure you go to the website. It's at the bottom, so you can get in there. It's all free. We don't ask for payment. Just want to get you the information you need to make good trades. Watching that support. Again, here's your range. Draw these lines on your chart. This is how you make trading simple. You go to the horizontal line. You just press Alt-H. Boom. Put one there. And then put one at about 227. You have charted Tesla successfully. Or get something like StockSpy that does it for you either way. But this range is the only thing to be watching right here and right now. Again, needs to break above 230. If it does, we're going to definitely see more bullish upside. We're going to aim for 300. We're going to watch for that retest, and we should make a good bit of money. But for right here, right now, we're just going to sit on our hands and hold our position until we get that breakout that we're looking for. So let's get over to the SPY. Your macro markets, we're also holding up here again on the monthly chart. Remember, this is the monthly chart. So this is each of these bars right here is 1 month of time. So that's giving you a lot of data all at once. So you want to take that very into careful consideration when looking at charts. So you're looking at the 5-minute view, you're getting a very small snippet of the picture. When you look at the monthly chart, you're getting a very good idea of the entire picture. So let's use StockSpy again, draw that trend line, see how it shapes up. Should have had this when I first started trading. So here's trend support on SPY. It looks like we are holding bullish as long as we stay above 410. We are watching $430 as our median price point of continuation. So again, to the daily chart here, we can see that the day started out a little rough and then buyers came back in and broke out. Very, very positive sign here. We wanted to see this push above 430 happen. Next target will be 442. I think we'll absolutely hit if we can maintain this support here. So we want to watch prices stay above 430. We're going to take a quick look at the options contracts that we can take a quick look at. Wait, let me go pull this up. Wait, can I pull these up at the same time? Hold on. God damn it. Sorry, I need to pull these up so we can just flip back and forth. It'll be super easy. There we go. Okay. So again, we're looking right here at a very interesting setup, right? So we held support 414. We broke above where we had already outlined support. We nailed this trade. So look, we've had these lines on here for weeks. We called bottom 409. That's where we're looking to pick up on support. We got it. Bullish signal went off. Good. Support above 414. We're waiting for the trade back up to $430, right? So now that we've broken 430, our next target's 441. So let's look at what options contract we're going to trade to get there. So let's start with, I don't mind December. Let's look at the liquidity, 440. Good delta, good open interest, good volume. I like that. Okay, so let's go to the hourly and then let's look at entry. So tomorrow, here's what we're looking for. We either open up strong and we push above 436.20. If we can do that, we're going to aim for 441, and I'm going to show you the exact contract that I like for this trade. 438.21 would be our next resistance. Okay. So again, price opens strong. We push above 430. So we want to see the price to break out above 436.20. So here's what that move would look like. So again, we open up, we push up a little bit, we get that support test. Again, we're on the hourly here. I want to have this at least on the 30-minute chart. And then from there, you're going to see it come up to test support. So again, we want to see a little pop, and then we want to see it test support just below 436.20. And then that's our confirmation. That's when we buy. We don't buy until we get confirmation, right? We never buy until we get confirmation. So if we have this on a 30-minute view, let's put on 30-minute view so you can see it exactly how you're going to see it tomorrow. You want to see that 30-minute candle open strong, come back down, test support, and then push up. Now, if it does, here's the options contract we're going to look to trade. It's the 440 call dated December 1, which gives you about 25 days till expiration. Low IV, that's phenomenal. Strong delta. Open interest is good. The volume was great today. Spread is very small, so this is a phenomenal one to trade. You can alternatively buy the 440. You can do this, and then you can click sell the 441, create a spread that's only 50 cents. Shows you that SPY's 441. That's what you're going to make. So what I would do here is I would definitely open a spread if you're new or if you don't really know what you're doing. If you have some experience, I would say going naked is not the worst thing if you know what you're doing, but if you don't, then I would be very careful. So again, 30-minute candle breaks up, comes back down, tests support. We don't buy until we find the support test. When we get that support test, that's the opportunity to enter the trade. That's our bullish position that we're likely going to see tomorrow, given the buying end of day here and just given the strength of price action over the last 2 days. Now let's look at the bearish entry. So let's say we come right up at open and we test like 436.20, 436.30. And then we come down another $1 or so and then try to test back up around 436, but get rejected. Then we're going to be trading downside back to 431. And if that's the case, here's what we're going to be trading. I like that same date, gives you 25 days, except you're going to the other side here. We're going to puts. And we are looking at the 431 price at $3.58. Delta is a little weaker here, which tells me that we're probably not going to see the move down. But spread is not bad at all. There's good volume, good open interest. So we'd be looking at the 431 put for December 1st. Again, if it opens, tests about 420 or 436.20, 436.30, gets rejected, comes back below that resistance, and then tries to come up again and fails. Again, we're buying the confirmation. Remember, we don't buy it right when it pokes its head up. We buy it when its feet hit the floor. And vice versa. When you're trading bearishly, you're going to buy when the feet fall through the floor and then the head hits the ceiling trying to test it again. And once that happens, this should definitely go back down to test 431, which means those would be in the money and you'd make a good bit of change. These could be day traded or swing traded, your choice. That's how I'm going to trade SPY. Those are the two positions I think would make the most sense given the price action. I think we're sitting much more on the bullish side of the equation now than anything else. Again, 434.50 is pretty much where we're going to be looking for support to hold intraday. So you want to have it on about the 30-minute or the 1-hour chart and make sure that it doesn't get broken down before then. Decent buying coming in. I do like anything above this $430 range. I think that's a very pivotal price point for buyers and sellers to fight over, wherein I think if the buyers can maintain strength there, this is going to continue to see upside till at least 441. And then inevitably, if we see that strength over 441, we'll start talking next targets. But I think realistically 446 will hit, and then we'll climb closer to 450, where we're going to have a real test, real battle to see if the bulls have what it takes to take this to new highs or not. Nevertheless, you want to stay focused on the here and now in front of you. And on SPY, that's exactly what I'm going to be doing. So that everyone is in the loop, in the know, and you know exactly what we're talking about. So again, we got our bullish scenario, bearish scenario. Those are the two that I'm going to follow. Wow. That really did boom. Let's take a step back. Let's look at this whole thing. So if you remember, we charted out these moves and we walked through how the SPY tends to work in increments that get bigger as you go further from the center point, right? So we looked at the COVID drop, that was 32%. We cleaned out that range, and then we look at the last three, which was like 459, 410, and then we did 444 to 380s. So basically you got 10%, 14%, 16%. Remember, as it gets further away from that origination point, it's going to get greater in volatility. We can expect the same thing to the upside. So again, we're on the weekly chart here, and that's a strong weekly chart if you ask me, and it's a strong support test, right? And we pushed above into this new range, which means our top side would be right around 441. The next one being about 457 if we continue to move from there. If you'll notice, this tends to move in this range and then clean it back up, move in this range, push back up, move in this range, and then push back up and test it over and over again. So if we draw these out, we could say, okay, it's above this range. That's good. So it's going to probably test through this range, which means it could go as high as 444. I don't know if it's going to test 385 again. I guess it did right there. But nevertheless, keep an idea on these ranges and make sure you understand why it gets greater as you go further from the origination point. Because I think that for people that are like trying to find their own price targets, trying to develop their own trades and their own trading style, it's something essential that you really need to understand is exactly how things, how price action moves in that way. Let's take a step back even further and look at the monthly. So other than COVID, you could see that we have very red and green opportunities here. We don't often get this many red months in a row. It hasn't happened in a very, very long time. As you can see here, to the greatest extent, it's 2 red months in a row. 2, it's almost 3, but I would say it's still bullish neutral. But the last time we saw it was COVID, right? Red, 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 1, 2, 3. Short of that, we'd have to go pretty far back in time, back 07. It's the last time we saw 3 consecutive red months. And then as you can see, every time we had those 3 consecutive red months, that was 07, sorry. 1, 2, 3. We typically had a nice bottom and then a bullish reversal. So what I'm hoping here is that we got those 3 red months, as I just walked you through. We haven't seen it other than COVID, right? And then the 07 crash. But anytime we did, we also got a consistent couple of months of strong upside thereafter. So going back to 07, 3 red months, we saw it still pretty mixed through those 2 months. So after those, we went from 82 down to about 68. So we still saw another 30, 40% downside. But then we saw upside for literally 10 years. So I think that this is worth understanding and taking a deeper look at, because you have to understand how this macro market stuff works if you want to be good at this in the long term. But I find it very, very interesting, which is why you've heard me talking a lot about $470 calls dated for next year, because we have not yet had an instance in which we have those 3 red months and then see another continued couple of red months thereafter. Anytime we've seen that much concentrated bearish move to the downside, we've always seen a couple of green months to follow. So COVID's a good example, from 242 to 350 before you saw downside. And then if you go back to this, I mean, you didn't really see much downside at all for a number of years. So looks like we did have it again back then. But again, bottomed out. So you had 1, 2, 3, 4 red months actually back in 02. So it's post-tech crash. Then a couple more red months, some pretty consolidated price action, but I would argue that's a much different time in general. And we also didn't have the liquidity in the markets like we do right now. We sure as hell don't have the liquidity we had back in 07 either. So I wouldn't worry about that. But as long as you don't see this sell side come in super strong, I wouldn't be too concerned, because remember, these buyers are going to sell eventually. I just don't think it's now. So again, to go back to this, I think that because we had those 3 men in a row, I think we're going to have another couple to the upside, at the very least to test 460, 470. Again, this is my opinion. Realistically, remember, this is our trend line, long-term trend support. So it's very realistic to assume that we could see another green month up and then red down and see mixed over the next couple of months until we find that trend support. And then we would see that move to the upside. So that's also an option, just so that nobody gets in there and thinks, oh, well, you promised. All right, so that's the SPY. I went through my bullish, I went through my bearish. You've got it. It's in front of you. There's a couple of tech names I want to go through that have had some big weeks / months following earnings, one of them being Shopify. I'm not completely sold on this move. Again, we're going to go back to the trend line here, follow that right along, and see that we are not yet above it. So I'm not completely sold that this is going to be the reversal that is going to make everyone rich, but it is pretty significant. Now, we traded this upside from just below $30. We traded it all the way to 70. It was a great trade. We doubled our money. It was a great trade, easy money. But I know a few people have been asking me, I really want to see this above 65 to start really paying attention and seeing what's going to happen in terms of setting price targets. The one that is on my list that is very interesting here is Amazon. As you can see, I mean, this is my hope for you guys, is that you're following these streams. Look, these ranges were lined up for you months ago. We were talking about them back here, back here, back here. Sorry, that was 2020. So no, we weren't. I guess it was right here and right here. So throughout all of last year and into this year, with this member, I've made a number of posts about it. 140 being pretty critical. If we see a breakout above 140, we got some real strength here and we got some upside coming. If we don't, then this thing's just going to come right back down to 115, 120, and then inevitably 104. This one I've outlined at length. I think that there's a lot of opportunity for upside here with Amazon. It seems to be kind of following that year-end trend and dating back to 2014, with moments of capture falling below this, where they did bring that price right back up to reclaim trend, which is a very strong sign in terms of the stock's underlying value. But also keep in mind that buyers seem to be getting stopped up at the top of this range. Now it is expanding to the upside, but as it expands, remember, there's also more downside coming then too. So just keep a close eye on this. Above 140, I definitely like it to 175. And it will be a trade that I will be eyeing to take. As you can see, it moved very cleanly through this range before. Now, given that was COVID money, it still means that it's possible to see that kind of liquidity through this range again, right from here all the way to push as high as about 175. So that's the range I'll be watching on Amazon. I really, really like that one. I think it's worth taking a look at. Great long-term holding. I'm still long on it and always will be. And the other one's Apple. So we crushed our put credit spread. We've closed out of the position that was, I think, a 98% gain. You could have locked it in at. Easy money, made $300-400 for just sitting there doing nothing for just a few weeks. Apple's still looking remarkably bullish, coming off of the iPhone release. I think that it's got some significant upside here if it can hold up right here and right now. It's got a relative high. I do like this little retracement here, 170 or so. We need to see more buying, more demand, more volume. But other than that, strong chart overall that I do like. Boom, boom. There's one more. Let me get this pulled up that I wanted to take a quick look at. And right after that, we're going to go through our trading principle for the week, something that I think everybody needs to stay on top of and understand and really ingrain into their life, because without it, you're going to be in a tough spot. Last week, I believe we talked about simplicity, right? Mike, do you remember, did we talk about simplicity? Was that last week? Number 4 that I did? Or was it that big bet, spring, big loss? I can't remember. You'll have to tell me. Or did we do number 5? Honestly, can't remember. Whoa. Oh, yeah, that screener. I had that for you, so hold on. That's it. SOFI. I've gotten quite a few questions about this one. It's very interesting. Volume has picked up quite a bit, from buying in the low 4s to that push to 1155. This is the monthly chart. We're going to go to the weekly. Again, buyers seem to be stepping back in. So this chart is interesting because you have your IPO price, right? Came in at like what, 1050, 1030, something like that. This thing ran to 13, then it eventually ran to 28, and then it dumped because they did a nice COVID launch. They were smart. Free money was in the market. So here's your cut point. Until this gets above $10, I really wouldn't pay much. Until it gets above its IPO price, I wouldn't pay that much attention to it. Now, and I know everyone makes the argument of like, well, I'd be buying it so cheap. I wouldn't go that far. There are people from that IPO whose stock has been unrestricted that I guarantee have thought about selling this a million times and might just do that when it hits their buy-in price, just to be safe. So you don't want to take that kind of exponentially unnecessary risk like it would be on this, to try and get an early entry rather than just buy the breakout of 10, because you should have upside to like 20. That should still be 100% run. If this can break 10 with significant volume, you're looking at least 40%, 50%. So I would keep a close eye on that one to break that resistance before you start buying. I don't think it's a get in early opportunity. I think it's just simply an opportunity to buy the breakout and take a nice trade that'll make you a nice bit of money without taking a ton of risk. That's how I'd trade that personally, just between you and I. So that's one I wanted to cover for sure, because I've been getting a lot of questions about that one. Oh, we did number 5. Okay, cool. So number 6, plan for the unknown. So this stuff's very, very important. This is like take a step back here from the charts and all that. Learning the charts are great. Learning how to evaluate a company are great. But learning how to understand yourself is essential. Without that, you're not going to do anything meaningful in your life or in the stock market, just being honest with you. I've never met a really skilled investor or trader that wasn't very self-aware. Never have. All the best that I've met are very self-aware. Very, very, very good understanding of who they are, what they want, and what they're going to do to get it. And if you want that to be you, if you think that could be you, if you think you have that potential inside you, then this is something you're going to want to pay close attention to, because it's something you need to hear. I detailed basically 8 truths from my trading journey that I think would apply to anyone. This one is plan for the unknown. You're playing a game without knowing the rules. We're never going to know the rules because we're not the ones who make them, right? The biggest money at the table makes the rules, and we're not keen to hear about those rules until after they've already screwed us. Prepare for surprises and always plan, because everything is always uncertain. If you're trading in the market, everything is an uncertainty. There is no guarantees. There are no guarantees. There is no guarantee, period. In any capacity, in any situation, in any scenario, it doesn't exist. So if you think there's a guaranteed win, you've been misled. And I hate seeing that in traders, because they get absolutely destroyed chasing after a unicorn that doesn't exist. So again, plan for the unknown, because everything is the unknown. Plan for every scenario, because you never have any idea. I can be extremely confident that this is a bullish setup. Doesn't matter. I plan for the bearish setup too. Why? Because I'm here to make money, not be right. Would you rather be rich, or would you rather be right? That's the question I'll ask you. If you're in the stock market, would you rather be rich, or would you rather be right? Being right doesn't pay the bills. Being rich does. So if what you want is to win, and win big, and win money, then focus less on being right and more on being prepared. If you can be prepared, then you will be right in the way of your profit. To me, being right in the stock market means I made money. There is no other definition. So if that's something you value, then I would write that one down. I would write it on your forehead. I would write it on your monitor. I would write it wherever you can, so that you see it, so that you take it and you ingrain it deep, deep, deep within your head, and do not forget it. All right, looking at a couple of setups here. See if there's anyone I want to cover. Start getting your smash or pass tickers ready, guys. Anyone that you want to cover, we will be covering those for you. This one is interesting. On the nicey. Look at that. Consolidation with Stocks Buddy say. It says Stocks Buddy wants it over 740. I like that. Let's go to the monthly. 765. I would agree. That's a nice bottom feeder setup. So this one was IPO at 22 bucks. You got some buying here, 460 up to $7. Then you had some buying here. With still a lot of selling, 530 to 831. Then a little bit here. So this thing hasn't gone green yet. This one would be great to watch. Breakout over 760. This one could see some upside. How much volume it's getting daily? Not too much. Very interesting. This one could be worth a watch. That's YMM. Just popped on my screener here. I like this. I like this one. Worth taking a look at. So, oh yeah, I'll make the screen big. Sorry. So feel free to pull those tickers up now. Drop them in the chat. We're going to play a little game of Smash or Pass. See if we like it for a long opportunity. If we don't, we're going to be very clear about that and tell you, so that way you're not wasting your time getting beat to death looking at stocks that aren't going to pay you. So the first one up, BNTX. Let's get this pulled up here. Oof. Oof. BioNTech, man. Out of $400. Absolutely crazy. Oh, it is. I guess it is holding up above 93 or so. Nope, I'm going to give this one a pass. So the reason I don't like this is because of I don't like this hanging Chad situation it's got going on. I'm not a big fan of that hanging Chad situation going on right here. As you can see here, it cleared the gap up to 104, and then it just started to sink lower. So like buying off these bottoms, I could get that. I understand that. But if you look at this thing's meteoric climb, clearly it was going to sell off after this move, but I would like to see it still in this range. So when this thing breaks up and can start consolidating and it's up like 180s, 190s to continue on path, on trend there, then I think it makes more sense, and it's something that I would be very interested in. It's also very interesting. Isn't this company that partnered for the COVID vaccine that they were like, they registered in October of 19 and then just so happened to be the one that figured this out in 2020 and could capitalize? That's kind of interesting. Isn't this the company? Or am I wrong about that? I thought they partnered with Pfizer on that. Sorry, it was kind of lagging a little bit there. Is that the one? Can you guys see those comments? Looks like it's a little bit frozen right now, so to make sure you guys can still see me. Can you still see me? Are you still here? All right, I'm gonna just keep moving because it's recorded anyway. Next up, Restoration Hardware. I always think this is Robinhood just because I see RH until I remember that it is in fact not. High-end luxury interiors, furniture, etc. Okay, so wait, hold on. Let's go back then. Is that not weird? Like, does that not trigger that little part in anybody's brain that itches sometimes? That's like, huh, that's a bit of a coincidence that they filed to go public in 2019. So they had effectively probably done nothing up until that point of note. And then suddenly, which I would also draw your attention to this purchase right here. April of 2020, there was huge buying, but it didn't skyrocket the price. So they're looking for liquidity around $40, right? They got it. And then boom, this thing doubled in price, big selling, more selling, doubled in price. It's basically tripled in price at this point. Some more selling, and then quintupled in price. More than that, 8 times in price, octupled in price, big selling. So somebody made a stupid amount of money on that liquidity, and some poor schmucks got fleeced buying this at $3.51 a share. That's hard to watch, as it always is. Very difficult, but it happens. But I don't know. I think that's interesting. That's just me. I love a good conspiracy. So you do have something interesting here on this one. This one would be a yes but scenario. I do like that little double bottom guy we've got right there. Let's see what Stocks Buddy has to say. Disagrees. Wow, Stocks Buddy says no thanks on the monthly until we're above 407. So this thing's been shorted into oblivion. Still bearish according to Stocks Buddy. I don't mind it as a not the 1 minute. Come on. As a very straightforward fixed risk trade, I think that if this double bottom intends to hold, where you do see pretty significant buying coming up relative to the norm, this could be a great entry point with a hard cutoff below this bottom, right? So like firm stop loss below this bottom. No excuses, no ifs, ands, or buts, because this thing has potential to go down to like realistically probably 163. If it falls from there, it's coming back down sub 100. It's coming down to like $80. So I would be very careful in watching right there. But I think this is a great opportunity. Give us one a nice smash here, because trading at 230, so you have the potential loss of 10%, right? To see potentially, I don't know, 25, 30% return if it's going to retest 300 plus. So I'm going to give this one a conditional smash. There you go. It's the best one I've written in a while. Might not be love, but it sure may be fun. So I think this one could be very interesting as a position trade here above tight stop above the low at whatever the most recent low is right there. So off that low, 209 or so, very tight stop. Take a little bit of risk there. Tend to basically take 10% risk to take 20% profit at the very least. I think it could definitely way more than that. You'd be looking at like 30% because I think it'll retest $300. So you can see a nice return there, at least a 2.5 to 1 in terms of reward to risk. So I think that one could be interesting there. So take a look there. BEEM Global. BEEM. What is this company? What is this company? What do they do? I'll put this over here so we can look this up together. No PE listed. Solar institutions have sold. They own some, but they've been selling. 13% short. Sales numbers are strong, but earnings past 5 years bad. Earnings coming up, starting to turn green. Quarter-over-quarter sales are up significantly. That's good. The weekly's turning green, although it's very red on the year. So it's got a buy to $30. So this is solar powered EV. I don't know about this, man. Oh, you can draw now on this. That's cool. I'm pretty sure that's yeah. But I don't know about this one, man. This is just not prime time. Like if we're above 11, sure. But we're not. So I'm going to give that one a hard pass there, my friends. Unfortunately, that chart is absolutely not my jam right now. I mean, look, so we still haven't even priced in the relative, like we're still trending lower. So like, for example, we haven't seen any clear signs of reversal. Like the most optimistic we can be is that we can call this bullish engulfing, which I would never dare to do that. Volume isn't there. Buyers pickup looks like 9, 10, $11, but we're not there. Again, it's got some range here, but even if you look at this, I would call pretty significant bottom of range around 689. We're trading below that, so that means you're in this range 551. So I guess like if you bought 550s and like very harsh cutoff, but this thing could very well price in new lows. So this is not one I would really. I just am not seeing the upside here. Wow, 76. Oh, this is one of the COVID EV runners. So it went public. Wow, it's been public for 2010 since 2010. That's actually kind of shocking. But I would still say that 537. If it holds here, then sure, buy here and put a tight stop loss that you do not ignore. But for the sake of this drill, I'm going to go ahead and say pass because I'd much rather see this above 1050 or so to give this a hard smash. Oh, the sneezing. Sorry. Jeez. So come on, drop these tickers. What else you got? I only see a few. I see United Airlines. Thank you, Tina. Somebody's participating in the drill. What else you got? Drop the ticker here. You get a once in a lifetime opportunity for me to dive deep for you. Well, that's a lot of selling for United Airlines. A lot of consistent selling. That's kind of ridiculous if you ask me. Wow, we're trading. Wow, we're sub IPO listing price on United. That's really shocking. So we have a really strong case for demand here at 28. Should we test that low? And then $4.90. Oh my God, this went down to $4.90 on September 11th. Whoever bought this made stupid money. The boomers, man. Any boomers that got deep in the market in the early 2000s, oh man, they made out with a stupid amount of money. Kind of unbelievable if you ask me, but whatever, man. But United, I'm gonna have to give a pass until we start to hit that demand level, 30, 32, maybe even as low as mid 20s, just because, yeah, it's just not there. But I will say that if we get opportunity to buy below $30, I do think that this is a great opportunity here, and it's one that I will probably be taking advantage of myself. Yeah, I think that that'll be a great buying opportunity. This setup right here is not good. It might complete that W pattern, but I think it's going to have to come to 28 to do that. I know you guys are familiar with that. I can't remember who it was. I was like obsessed with it for a while. I guess I don't even call it a W because it was so straight. I mean, I know that people are making a case for that M pattern now, which would again put it low 20s when that completes, and then it can become a W of sorts. All right, good. We got a couple more. MTB. Ooh, the banks, man. I don't know. How big is this bank? Is this a big bank or a little bank? I'm passing. I'm not a bank guy right now. So unfortunately, this was getting past, my friend. I feel like this is just too dangerous of a game to play. There are far better opportunities in the market right now than getting involved with whether it's even medium or reasonably sized banks. I think that there's far better opportunity than banks right now in the market. So I'm going to give that one a hard pass just simply because of its affiliation. Unfortunately, Mark. Mark's got that wide range. You got a nice saucedo there, a nice cup and handle situation there. Let's see where we saw real demand. So testing resistance now. This is a nice bullish chart, but I'll tell you right now that the buy on this was right there. That 70s, low 70s, that's where the upside was. I'd say volume's thinning right now. Bumped its head on resistance. It's got a ways back down for the sake of this drill. As in probably continue to trade down until you see low 90s, at which point then it might be a good buy if it's a strong cash based company. But fortunately for right now, my friend, Isaiah, that's who loved the W pattern. That was the guy. Where's that guy? What's that guy up to? You seen that guy? Oh, Snapchat. This one's always fun to take a peek at. You guys know how I feel about this chart right there. Like, see you later. Just above 870. I actually love that for a buy. I think that that's a great accumulation zone between like low eights, low nines. I think that's a great opportunity to accumulate a company that's very forward thinking and has some great technology that I think will definitely be put into play over the next couple of years. And we all know that I outlined that $10.30 price point as being kind of like the breakout point here. And as you can see, we were right. It's trading very nicely right now, above 1073. You got some nice consolidation there. Went as high as 1381. Since we talked about that breakout, that was back in December. We talked about that breakout over 870 and then $10.30. Traded up to 14. Looking at this run right here, I think there's definitely an opportunity to hit upside. What would make me nervous is this selling that's been happening. There's buying there, but there's a lot of selling too. But I'm going to definitely have to follow and trust my gut. On this one, it was already given a very firm smash from me when we were looking at that low $8 demand zone. That was the buy, in my opinion, the very low risk, high reward buy, aiming for, obviously 12. Then you just walk up 15, test the gap 21, and then there's obviously way more opportunity for upside. So below IPL price, but I think accumulation's been happening, and I think demand is there, and I think their technology is forward thinking enough that they makes them gives them a great runway. And I know like the future of kids use Snapchat more than anything else. Like kids aged like 15 to 20, I think are still heavily invested in Snapchat. So I think it's got some e-commerce potential. To CAC, we already did Amazon, but I will do BABA because I was looking at this one earlier today. And this thing has just been in consolidation station, just waiting for dad to feel confident in the position to make that final buy. Again, remember we traded this one. We were buying it down here. We traded up to 120, big money, great win. We bought again. It went up to about 100. I've been just loading up these low $80 shares. Again, we've been a lot of big buying. You could see those. You can see all that above average demand there, buying in this range. This one's getting a firm smash and a tip of the cap from me. We've been talking about this one, and I've been buying this one in the low 80s for months. This is a great accumulation guy. If you can get that $80, $81 fill, it's a great deal. It's just a matter of time, in my opinion, before we finish this consolidation, we wrap this up, and I think we see another test of the hundreds, and then hopefully my goal is to see this around 150 again. So that one's been bent a smash. Matthew Sauerbrunn, what's up, man? You seem new. I don't think I've seen you in here before. If I have, my apologies, but welcome to the party. Let's take a look at the triple M's. The triple M's, man. Who here remembers Micro Machines? Unrelated, but also contains M's. Micro Machines. Anybody remember those? Oh, that must have been post. Let's go to daily so we can see earnings. Wow, tons of liquidity. Was that the dividend stuff? Yeah, post earnings plus dividend. That might have been the mask hike rescare. Micro Machines were awesome, dude. I was just thinking the other day, like, you find somebody tweaking on meth, imagine just throwing like 100 Micro Machines into their apartment, dude. Can you imagine them trying to dissect those little listening devices that they find on the floor? That'd be hilarious. Micro Machines. I just saw them at a thrift shop, dude. They're selling those. That was expensive, man. Oh, well, welcome back, my friend. The name didn't look familiar, so I was not sure. Yeah. Micro Machines, man. Those would come up a lot. Look at that. Oh, this is a great opportunity. So I remember we were trying to trade this in the low 100s. We were trying to scoop this thing up, and it just did not abide. When I put that alert out there, it just didn't want to hang around. But this is one I love, long term, great dividend player, very well diversified company that I think it will always stand the test of time. I think they're going to be around a while. Because I don't see any reason this would go anywhere. And this is a nice top of range. So this price point right here is where it used to bump its head as resistance, right? So the goal is for this to hold as support and tell us that this is a key price point in which buyers are going to step back in the same way they did right here before the price took off in 2013. So those same 2013 buyers might be buying again, but more importantly, those sellers, I don't think are going to have as much strength there. The only thing is, if you look at let's look at long-term trend support. Oh, no, that's it. So we did pick up off long-term trend support. And then that's like the big daddy, the good news. So when it broke there, that's when it was done. But that's good. So that would be your options. And then here's your midline. So we just basically did the same thing that fib fans do, which is a very simple process, right? We broke this down to 3 segments, right? So when it holds here, it has the proclivity to head back up to the upside here. When it breaks below here, it has the proclivity to head to the downside. So what we're looking for is that reversion to the golden mean, meaning we've hit the bottom, and this is long-term support. So now what we'd expect is for price to make its way back up, which puts us in a significantly more advantageous position, because when it does cross that midline, when you can get these bottom bounce entries, right, and it comes above and it stays up, the goal is to see it inevitably retest the top of the fan if the company has strength and headwind, right? So you could be scooping a bottom dollar entry on a great dividend paying stock here. I'm going to go ahead and give this one a very firm. Loving, tender, and firm. I like this one. I actually think this one's a pretty strong buy here. I actually might put out an alert now that I think about it. I need to set more price alerts. What would my stop be, though? It would just be below the lows. But I'd say realistically, so it hasn't even tested that low. So let's see where it has. Okay, so right around 85. So I'd say 82 would be worst case scenario. I mean, it's absolutely boomed from this same level before. You could see that right here. So the hope is that we'd see that same liquidity and demand come in if they still believe this company is worth what it is. And I mean, to be honest, with the devaluation of our currency, this thing has this valuation would be significantly low. I mean, let's just take a quick look at from a PE perspective. Yeah, its current forward PE is below 10. So that's insane. Price targets this year, though, are still putting it at 110. So they must not think that they have the opportunity to. Let's look at what their earnings readout is. So earnings expectations are for shrinkage and then growth. So this could be a great one to buy for, wow, 4 revisions up. This could be a great one to buy for the long term. So 2 revisions down for December earnings. This is conflicting. It says December 2023. 2 revisions down, but then this for the quarterly earnings. Oh. They expect the quarter to be down, but the year to be up. That makes sense. And Q4 of 2024 is expected to be one of their better earnings readouts over the last 4. So I would say that this one could be a very interesting opportunity here. Worst case scenario comes down in the 70s, which this would be a steal to buy this, low 70s. Well, I was trading up there. That was the COVID low to 114, and then it boomtowned, but it was already on the way up. Yeah, this one's interesting. We're gonna take a deeper look here. Let's see what Stocks Buddy says. Oh, Stocks Buddy's a bear. Yep, 112. So it wants it to basically retrace that move. I get that, man. That's the safest bet if we're being honest. Look, it aligns with our midsection right there too. So take it for what it's worth. But yeah, look at that. Perfect timing. Right at 5 o'clock. We did it. We're the best. We out here, man. As always, if you have any other additional questions, just hit me up on Discord. I'm happy to answer them. For those of you that are already in the Discord, check out these alerts. I'm going to be probably drawing one up here on 3M because I do like this chart, and I think we're at an interesting precipice right now with some good opportunity, fixed risk trade. So as always, I love y'all. Thanks for being here. I'll see you Friday when we're trading live. But for those of you in the Discord, I'll see you before. I love y'all. Stay blessed now.